XRP is at the center of a huge change in the crypto world that is about to happen. Recent events show that the Federal Reserve has taken an unusual step that could cause one of the biggest supply shocks in the history of the cryptocurrency market. The Fed has told Ripple to destroy half of its escrowed XRP coins right away, according to sources. This change isn't just a normal one. This is an emergency order that cuts the overall supply of XRP, making it seem like there isn't enough of it. Analysts predict this might drive the price of XRP up to $5,000 or more. Today we'll talk about what this implies for investors, why this lack of supply is so important, and how you can get ready for the possible price spike. We need to know how Ripple controls the supply of XRP through escrow accounts in order to fully understand how important this is. When Ripple first introduced XRP, it put a lot of tokens, more than 50 billion, into escrow wallets so that they could be released slowly over time. This architecture was meant to stop the market from flooding and keep XRP's value stable by limiting the flow of supplies. Every month, a certain amount of XRP is released from escrow and given to Ripple. Ripple can then sell it, use it for partnerships, or the Federal Reserve's most recent action throws this finely balanced system off. But the Federal Reserve's most recent action throws this well-balanced system off. The order says that Ripple has to destroy half of its XRP that it has in escrow right away. Burning tokens is getting rid of them for good by sending them to wallets that can't be accessed again. This is not a short-term freeze or lockup. These tokens are gone for good. This huge cut will make Ripple's accessible XRP supply much smaller, which will make billions of currencies less available on the market. This big of a cut is a perfect example of how financial assets may be made scarce, which frequently causes prices to rise quickly. To figure out how this burn affects the price, let's talk numbers. There are around 50 billion XRP tokens in circulation right now, and another 50 billion are locked up in escrow. If you burn half of those tokens that are in escrow, you will take away about 25 billion XRP from the overall supply. After the burn, the circulating supply would shrink a lot, making each XRP currency more rare. Now let's compare it to Bitcoin, which has a hard constraint of 21 million coins and is considered digital gold because it is hard to find. Ripple has effectively moved XRP closer to a fixed supply asset by cutting the amount of XRP available by a large amount. This usually makes prices go up in financial markets because of the way supply and demand work. The second question is, how does this lack of supply affect the price of XRP? Theoretical value can be found by taking the existing market capitalization and dividing it by the new lower supply. Experts that use this approach say that XRP's price might rise to $5,000 if demand stays the same or grows. Using basic economic principles, we came up with this estimate. Prices should roughly double if supply stays the same and demand stays the same. But for XRP, the drop is significantly bigger compared to the supply and predicted demand growth. This price target is not at all unrealistic when you think about how more and more institutions are interested in Ripple and how its relationships are growing. It's based on the economics of supply and demand. The Federal Reserve's decision is also important since it shows that more and more institutions are starting to see XRP's potential. The Fed seems to be making XRP a rare regulated asset with solid support by getting actively involved. Banks, financial institutions, and even governments that have been keeping an eye on XRP's growth, and Ripple's technology may be more likely to use it. Ripple's existing connections with major financial institutions and its position in cross-border payments give this story more weight. In short, XRP is changing from a speculative cryptocurrency token to a strategic financial asset that is supported by the highest levels of regulation. Another important thing to think about is how this burn will affect how people think about the market and how ordinary investors operate. As more people hear about the escrow burn, FOMO, or fear of missing out, is certain to grow. People who own XRP and people who might want to buy it will hurry to do so because they think the price will go up because there aren't many of them. This sudden rise in demand, along with the huge drop in supply, will probably cause prices to go up very quickly. If retail investors wait too long, they may not be able to afford the tokens since institutional whales and big funds are buying them up through over-the-counter sales and exchanges. This burn's timing couldn't be more important. The crypto market is already showing signs of fresh bullish momentum, and XRP is likely to benefit the most. If you already own XRP or are thinking about getting it, this could be one of the last chances to get it for less than $1. Once the market has completely priced in the burn, the door to cheap XRP will close, and prices could go up a lot more than most people think. It's evident that action needs to be taken. If you wait too long, you can miss out on gains that could change your portfolio. You should also think about how this will affect the whole crypto industry. A supply shock of this size in XRP might have an effect on other cryptocurrencies, causing money to move across the market. Traders may respond to XRP's growth by making the prices of Bitcoin and Ethereum go up and down. Also, this event could bring more attention from the public and regulators to crypto assets, which could speed up the process of people using them more. In that way, Ripple's forced burn isn't just a story about Ripple. This is a really important time for the whole crypto business. The optimistic case is strong, but investors should still be careful. The markets are always changing, and things like new rules, big economic events, or technology problems could influence the path of XRP. You should do your own study and think about how much risk you're willing to take. But the basic reasons for this supply cut are solid, and the possible benefits are big enough to be worth serious thought. Ripple's plan also points to a positive future. The company keeps coming up with new ideas. For example, it works with central banks on CBDC initiatives and grows its footprint in the global payments infrastructure. These changes could make XRP more useful and in demand, which would make the supply and demand situation even tighter. The escrow burn is a catalyst that connects Ripple's future growth with a smaller supply, which is a great recipe for price increase. In short, the Federal Reserve's emergency order for Ripple to burn 50% of its escrowed XRP is a historic occurrence that affects XRP's supply structure by cutting the number of tokens available by a huge amount. This action starts a price rise based on scarcity that might take XRP to $5,000 or more. Investors have less and less time to buy XRP at these cheap prices before the supply shock causes prices to rise quickly. XRP's new limited quantity, compared to Bitcoin's constant supply, shows how XRP might become a very rare and precious asset. This isn't simply a guess. It's a scenario based on sound economic fundamentals and growing regulatory support. As this story develops, keep an eye out for further developments. I'll be giving you ongoing analysis and breaking news to help you make sense of the fascinating but unpredictable world of XRP and crypto investing. Keep in mind that now is the time to act, and making smart choices will be important if you want to make the most of this historic moment.